if you go for the safer approach with stocks or anything else, and go for a diversified approach, you're never actually going to build a wealth. Like nobody became wealthy from diversification. My dad did a little bit around trading. He actually set us up with like a dummy portfolio. I remember when we were kids. We actually got pocket money based on how much that portfolio was up or down. Nothing that we know of as human beings more scarce than Bitcoin, because everything else you can create more of. So it's all about decentralization and less control and government and things like this. Where CDVCs are the exact opposites. We're calling it crypto, but it's bank issued and bank controlled.
Hey everyone, welcome back to the show. Today I'm joined by my co-host Tong and a very special guest, Kunal. Kunal is a crypto trader and has been in retirement for about a year now, partial retirement. How did you get started in crypto?
So crypto, I joined in 2017. So this was at the time when Bitcoin was going through the cycle. Generally crypto, but Bitcoin was going from couple of thousand or so. When I first looked at it, it was less. It was in the hundreds, and it went up to that 20,000 kind of peak in December or so in 2017. That's when I really kind of caught wind of it. I remember when I first heard about it and wanted to learn more. I'm very kind of like into technology in general, like all kinds of gadgets and coding, and I live my life off spreadsheets and things. So the technology side of things was something that interested me, and that caught my eye in some forum where I was looking at or whatever online. And I started kind of learning from a lot of kind of OGs, I guess, that you see now in the crypto space, and hearing what they had to say. I know like Andreas Antonopoulos, who's like an on-chain analyst. Max Kaiser was a big bull early on. I started kind of seeing these kind of come up a lot on my channels and things on YouTube. So I investigated a little bit myself. And that's where like around 2000, when it was around 2000, like, well, this is something I probably really want to get some exposure to. I had previously tried to make investments in London, like an investment property, but we were very unlucky when it came to investment properties, and tried offers on one or two. They always fell through or couldn't find the right one. And we actually ended up parking money in like crowdfunding kind of platforms and property partnering, where we have like shares of a property, not full property. So I was always on the lookout for where I could get better bang for my buck from my investments, if you like.
Yeah.
And this just seems to tick all the boxes. So set up an account on, I think, blockchain.com at the time, and thought, right, let me ape in with some of the funds that we wanted to put a deposit down on like an investment property on, part of that. But I found that I was limited straight away, where I could only put in, I think it was around 200 or 300 pounds every few days or weeks in this platform. You couldn't put in any more than that. It doesn't seem like much of an investment. So I didn't actually invest a lot at the $2,000-$3,000 mark. And by the time I sorted out other ways I could invest, the price had already jumped to 6,000. So I think a lot of the stuff that I initially bought was kind of around 6,000 to 8,000.
Yeah.
But not the kind of volumes that I meant to buy. And a lot of that kind of really involved having a conversation with a work colleague when we had a trip to the US. And this work colleague also just was kind of learning a little bit about crypto at the time. And just because you travel, and the travel takes a long time to get to the US from the UK, we ended up spending most of the time talking about Bitcoin, and that kind of like spurred me on a little bit to say, no, I'll find another way to kind of, go a little bit more into it or learn more. And really just got into it then. Unfortunately, like when it did go up to 20,000, I think at the time I would have definitely been in the mode to take some money out and stuff. But we were actually in holiday in Australia in December. And that year we got family here, which is part of the reason why we moved. And so didn't really, while on holiday, kind of did its peak and crash, but you're not really paying attention to the markets and things.
Yeah.
When you're rolling. And by the time I got back and kind of really got my head around it, it's like, should have probably sold last week. And now it's the call.
Yeah.
Because it's pretty much break even. But then a lot of the other stuff, a lot of the altcoins and stuff, they're like really low, and now it's a case of we're in it for the long run now. And so ever since
Yeah.
that, just been kind of slowly chipping in and buying more and more where I can. And yeah, some of these other kind of like people that influenced, like, really early on, I had like a list like Tim Draper, Dan Hell, all these people that they were on YouTube and other kind of interviews and channels quite often, and I learning a lot from them, as well as just researching just online about cryptocurrencies and mainly Bitcoin.
Hmm.
Yeah. I think a lot of normal people, they tend to get quite a little bit like put back by crypto, if I could say so. Generally just because the market is extremely volatile. And it's like a 24-hour market, right? It's getting traded at any given moment, and then sometimes you can fully miss out on an opportunity to take profit because of that. Did that not deter you from crypto, or why were you interested in investing in crypto as opposed to other things such as the general stock market?
I was always have been interested in general stock market. And we've always had some investments in the market.
Okay.
I just felt like it's very much a long term. It's a long term thingy, to be honest. Even with crypto, I see it as very long term. But with the stock markets, you have to have a particularly long term kind of view because the volatility isn't actually as high. And so it's ironic because right now, in the last few years, especially since COVID, the numbers, even in the stock markets, have been pretty volatile. Like some of these numbers that you see these days, just for normal stocks, is actually swinging quite a lot. But kind of in the early years when I was trying to dabble a little bit in stocks, the movements were there, but they were like just a few percent here and there, and so you couldn't really make much of a difference, or you needed to use a lot of leverage to build up a lot of risk. And so crypto I just thought was just a much more volatile, which actually attracted me. A lot faster, and just a little bit more exciting, to be honest. It's also dealing with like new technology. You didn't have some of the kind of regulations and the restrictions around some of the platforms or how you could use your spending. Like even things like, when you have your retirement accounts or pensions and things like that, you can only just say what's your level of risk. You can't really take your individual stocks and go for the high risk stuff, because my thinking was in our planning is you go through phases of your life, and at some point you need to build up wealth, and then once you've got the wealth, you need to protect that wealth. But from day one, you're kind of told that diversification is the right and sensible thing to do, and you're almost foolish to like get too risky and put all eggs in one basket and things like this. But if you think about it, really, if you go for the safer approach with stocks or anything else, and go for a diversified approach, you're never actually going to build a wealth. Like nobody became wealthy from diversification. Like Elon Musk or Jeff Bezos or anyone, any big entrepreneur that you can mention, they put everything into their idea, their business, their startups. You guys have done startups. You don't diversify to build wealth. So that's where my kind of thinking was, and that's where I saw crypto as something quite exciting. And it was a means to build wealth, and at a faster scale than what you would have to do if it was on the traditional kind of approach.
Yeah, I think definitely with crypto, it's much more fast and you can make a lot more money quickly. But saying that, you can also lose a lot more quickly. But so I think that's one of the main reasons a lot of people get attracted to it in the first place. I think you already mentioned this a little bit, but what would you say is your trading style? Like, do you do more long-term investing, or do you also do day trading in terms of crypto?
Yeah, so I think my main style is long term, kind of buy and hold.
Yeah.
That's what I've kind of been doing like since 2017 on the crypto side, but even before that, just on stocks, and if it was property or any other kind of investment vehicle, it was looking at it from a long term perspective. And I think that's actually always the sensible kind of approach. When I look at some of the influencers, like you've got Michael Saylor, MicroStrategy, it's literally just buy, don't sell. Just That's your one job. It's like there's nothing clever you need to do. Just buy and hold, and you'll be fine. And even like Anthony Pompiano, just a lot of podcasts and stuff. It's all the same kind of basic premise of if you've got conviction in something, you buy it and you hold it. And that's, I think, been the most successful for me in the long term. Having had more time though, and having an interest in trading and looking at charts and stuff, that is something that I do as well, but with a much smaller part of the portfolio. That's to see, effectively, can I outpace my buy and hold main accounts effectively, and increase with the small amount, and go past some levels so that I can actually contribute back into my long term. So I use chart analysis stuff. There's a lot of again, a lot of stuff I see is on YouTube and other places, but Kevin Svensson is one of these, I guess, for me, like just the best guys to follow on YouTube. Like I'll share some of these links and stuff for these people later, but Kevin Svensson definitely has been one of the ones I've really learned a lot from. And then all these other guys like Paul Moon and Da Vinci and Benjamin Cohen does a really good newsletter and things. Just following where some of these chart patterns are happening, you kind of watch it, you learn, you have your own guess of where it might go, and it's getting what you're doing right. It's kind of good to just try and just put small amounts and see, am I getting my swings right? What I will say honestly is the day-to-day stuff I get wrong far more often than the long term. Even the long term stuff that I have got wrong, there's a lot in my portfolio which is, down 70-80% even. So it's not like I get the long term stuff right, but it's just with the short term stuff, you get called on it, you get leveraged and called, or you have to sell your position to do something else pretty quickly. The long term, you can just hold it, and if it's gone to virtually zero, there's no need to sell it. You can just hold it, and maybe next cycle it goes back up or something. But it's just good to put some money behind your thoughts and just see, does it actually make sense and does it actually work? And then you learn from it effectively. But yeah, a lot of people I follow and read up around how to do this stuff and kind of almost self-taught a lot of it. My dad did a little bit around trading. He actually set us up with like a dummy portfolio. I remember when we were kids. We actually got pocket money based on how much that portfolio was up or down.
Oh, that's cool.
Yeah, it's interesting. Yeah.
If we were too much up, he's like, I'm not going to give you more, whether it was 5 quid or like, this is ridiculous. But, we used to do stuff like that. So when you're doing it and it doesn't really mean anything, you can probably get some good returns. And I think we're watching all these guys and watching the charts. Oh yeah, I know what's going to happen. And you feel like a genius. But then you actually put your order in and you have a live position. And it very rarely works out in the same way. It's the win percentage is a lot lower for the real money than what you think.
Yeah. Assuming that I've never traded in crypto before, how would I get started? Would be my first question. And then my second question would also be, how can I, minimize my risks, if at all?
Yeah. So everyone I speak to be honest, I try and like orange pill and I try and get them involved into crypto. But the most basic way is, it varies like country by country and whatnot, but you just find the most basic and most widely used on ramp. So things like CoinJur here in Australia. I know Dongo's like the CMO there, great company. And like Coinbase in the UK and other places. These kind of very known, very well established kind of platforms are probably where I would point anybody new to. They're very simple. It's like the normal kind of process, logging in, signing up for an account, very easy. And it's a very nice interface. You just buy your coin there. The only thing is, when you buy there, it is on that platform, and that's kind of like the basic thing to do. We'll go on to, the better way to do it probably, or the more advanced way if you've got more money in there. But definitely, if you're just new, sign up to these standard accounts, depending on your country, what's allowed in that country. And I'd just say, like with anything, like I just said, like with the trading thing, it's don't think that, oh yeah, I might want to buy, and yeah, I would have bought then, and oh look, I would have made this much money. Get onto one of these platforms and just put in $100, whatever you're comfortable putting in, something small, just put it in. Buy your crypto, and again, the other thing I would say to anyone is buy Bitcoin, because there's Bitcoin and there's everything else. And buy Bitcoin, maybe something else if you really want to, like a smaller amount, and just watch it and just see how it moves up and down. That'll make you learn a little bit about how these things move. And it'll kind of get you into the rabbit hole of what it means and what this platform does versus that platform because you've heard something else. And it just kind of starts to snowball from there. It would be the same advice if you wanted to, get into stocks. Would be get your standard brokerage account that's like, comes up on Google as one of the best ones in your area, and just put in a small amount. And that forces you to learn a little bit. If you don't put in the real money, even just like, $100 or whatever, you don't really start learning the proper way.
Yeah. I guess once you put in the money, you actually have some skin in the game, which motivates you to actually pay attention. So I think, that's a good technique to just put a small amount in first and learn a little bit.
Exactly.
But as a complete beginner, can you just give us a brief description of what different types of coins are out there and what are like the differences between them?
Yeah. So like I mentioned just now, like there's Bitcoin and there's everything else. And I can't emphasize that strongly enough, because crypto gets a bad press. There's a lot around, to scam, it's money laundering, it's for criminals. There's all kinds of stuff going on about it. And it's scary. And everything really is done to almost prevent you from taking that first plunge. Because there's warnings everywhere, and you set your own risk, etc., etc. But there's very different types of crypto. So there's, like I said, there's Bitcoin. That's like the one that started all. That's the OG, and that is completely separate from anything else. So it's almost like don't even think about it as crypto. It is a cryptocurrency, but Bitcoin we'll talk about as something completely different. Everything else you could categorize into a few different kind of areas. You've got stable coins. So things like USDT, USDC, these are actually one-to-one pegged with the US dollar. So they are in effect a currency and a stable coin that literally just linked to what the real world value is of the dollar. That's one category. You've got other categories like platforms, things like Ethereum, Solana. These are their own separate chains to like a blockchain that's used for Bitcoin. The Bitcoin has one chain, Bitcoin blockchain, and then all these other chains are completely different, Ethereum, Solana, etc. All of these chains, you'll find various other coins. And there's a lot of DeFi, decentralized finance. So things like Uni or Aave, these are different kind of things that you could do in the real world, like take loans or make conversions. These businesses or services live on various blockchains. And so those are a particular example. You got things like oracles or real world assets, so things that actually connect blockchains, like Ethereum, to a real world contract for a property or a bank loan or something. So you've got oracles. Chainlink is one of the big ones that I've been kind of in for a long time, since 2017. That's an example of one of those. And then you've got some of these other ones that make crypto seem a bit funny. So you've got NFTs, like literally JPEGs. They're unique. You own them, but digitally anybody else can copy them, but you own the real one. And why is that valuable? Some of them now are starting to get utility, like ticketing into various events or other use cases where you have some utility based on the fact that you've got that NFT, like you get discount on something or whatever else. You got NFT, but metaverse stuff, like, let's forget crypto. Even Facebook, it's changed their name to Meta. It's an entirely different space, but there's crypto metaverse coins as well. And then there's the narrative that's really happening a lot in this particular cycle, which is meme coins. Dogecoin is a meme coin that blew up last cycle.
Yeah.
But there's a whole lot more that have come up this cycle with the popularity of Solana. Most of them are on Solana. And these are coins that literally do nothing for the community, but they represent that community. And it's about meme, like funny meme, like dogs and cats and all kinds of stuff.
Yeah.
So it's just like a collectible, basically. And then all these coins effectively fit into one or two of those categories.
Yeah.
But they're all called all altcoins. And the vast majority of them, like 99% or so, I'm afraid are, either scams or not really, don't really go anywhere. They will go to zero. There are maybe some well-meaning startups that, just fail. But yeah, there is a lot of scams and stuff out there. What I would say though is like, the top ones, the ones that are in the top 20, top 50 kind of in the coin market cap, which is like a website which kind of lists more.
Yeah.
And when you get to a certain market cap, they're not really, full-on scams or rug pulls. They can be still, and you still have to do your kind of due diligence. And any coin can still go to zero effectively. But that's what kind of gives it its bad name. And then there's one final kind of like category of crypto, which is not really crypto. It is using the same technology, I guess, but it's CBDCs, central bank digital currency. And I think this is something that unfortunately is inevitable as a kind of like a stepping stone of taking the masses into these kind of technologies. But it's not, it's kind of like an antithesis to what crypto is all about. So it's all about decentralization and less control of government and things like this. Where CBDCs are the exact opposites. We're calling it crypto, but it's bank issued and bank controlled, and that can make things easier in terms of connectivity and cross border stuff and cost of transactions and things for sure. But there's a lot of concern around privacy. It's like you get insurance now, car insurance, which is going to be a lot cheaper, but you have to fit a tracker in your car so that they know how fast you are really driving, what times of the day you travel, what kind of areas you travel, where's your car really parked. They'll have all the information. And it's not to say that, that means I can't lie or something, but, it just does mean that they have more information about you and what you do than maybe you would be comfortable with. So if you, for example, have some health issues or whatnot, and you go to buy alcohol, cigarettes, or junk food, and your transaction is denied because your health insurance, you can't have that. Or maybe you do get to have that, but now your health insurance is void because you had too much. It's that kind of thing that there's a risk.
It really goes against what crypto is standing for, right? Which is freedom, right? Doing whatever you want with the money. Whereas CBDCs, as you've mentioned, people can just know what you're doing with it. Banks know what you're doing with it. Governments know what you're doing with it. Because I think it's also government funded and supported as well, right?
Yeah, it is literally central bank digital currency.
Right. That's what it stands for, right? So for sure. Just moving back a little bit, talking about Bitcoin being, I guess you could call the father of all cryptocurrencies. A lot of people consider Bitcoin like digital gold, virtual gold. Could you explain what that means?
Yeah, so I think with all other cryptocurrencies, who started it, right? They're like Vitalik, who did Ethereum, or lots of other names of people who did the different coins and stuff. So there's an owner, and there's an issuer of the coin and everything else. Bitcoin, the story behind it is created by someone called Satoshi Nakamoto. Nobody knows who he was, who she was, who they were. But they created it and launched it and effectively disappeared. At some point, we might find out who that person is and if they're still alive. I hope not, because that's one of the things actually genuinely as a risk planning scenario is probably one of the worst things in my head, because they'll have I think I can't remember now, like 4 million Bitcoin or so, or some crazy number that then becomes in play, and if they start to dump it, then well, hell can break loose. But anyway, that scenario aside, Bitcoin was started and was launched back in 2008, 2009. And when I started getting interested in 2017, it was almost 10 years already that this thing has been running by itself. And it just relies on a completely decentralized framework. It just relies on people around the world mining the coin, doing the work to validate transactions effectively, and get rewarded in Bitcoin. And this has just been going on and on and on since it started. And in that whole time, it hasn't been hacked. It can't be broken. And it's just got progressively bigger and bigger as a network and just grown through that period with nobody owning it and managing it effectively. So it's completely decentralized, whereas everything else you could say is centralized because you have somebody who started it, right? And this is where kind of the similarity to gold comes in, because in starting this thing, this magic money online, there isn't a point of control. There isn't somebody who can flip the switch to say, actually, no, I'm going to increase my own supply of it. In the code of Bitcoin, there is going to be 21 million in total. And that's it. It's locked in the code. There's no central person that can change that. And what that does is that makes this asset the most scarce asset on the planet and online. There is nothing that we know of as human beings more scarce than Bitcoin, because everything else you can create more of. Even gold, which has got its value from being a scarce asset, if the demand and interest in gold increases, people will find a way to mine more gold. I think the gold actually, it's not, so it's scarce, but it's actually quite abundant on the planet. It's just in tiny volumes and, difficult to extract and whatnot, but you can actually do it. If the technology gets better, you can extract more gold. So it's different to gold in that way, but the same principle of scarcity is what makes it comparable to gold. However, as gold, there's other things that you can do to say how good an asset is, right? So there's a few measures, just to list them, like durability, portability, fungibility, verifiability, divisibility, and scarcity we mentioned, and that one more actually, censorship resistance. In all of these different ways that you, all these characteristics you need to make a true hard money, which gold is, Bitcoin is effectively better. So it is more portable. You can't carry gold around. You can have like a gold watch or ring or whatever, and that's one of the main use cases of gold, apart from as jewelry. But you can send $1,000, $100, $10,000, $1 million of Bitcoin to the other side of the world in 5-10 minutes, instantly. You can't do that with gold. You can verify it instantly on the blockchain. It's there. It's completely transparent. It's open for everyone to see. You can't do the same with gold. There's this whole thing around Fort Knox in the news recently. Like, does the US actually have the gold? Nobody's actually done a proper audit of the gold in Fort Knox. Now, in my opinion, I don't think it's there in Fort Knox. I think it's just spread around. Like what you do with paper money, right? In my situation, banks don't actually have the cash. It's your paper cash. Right? It's paper gold, and it's transacted and multiplied through various mechanisms and vehicles. So really, the paper value of what gold we have is like 100, but the real amount of gold that we have is 10. Like, there's a multiple, like the same way as with banks. So, it's just not comparable in the same way. It can be divided completely. And like I said, the main thing around scarcity, Bitcoin is actually scarcer, and it's sitting now at market cap Bitcoin of like 1.6 trillion. Gold is almost 20 trillion. So if we think that Bitcoin is a better version of gold, which is now starting to become more and more of a mainstream kind of an opinion, when it does that, at some point it's going to flip gold. If people actually genuinely realize that it's better than gold and it serves a better purpose for what gold is being used for, apart from the jewelry aspect of what gold is used for, as a store of value, Bitcoin is better. It's a digital world now, and you have AI agents and various other things. These things all need real hard money that they can transact in, not gold. Even the dollar. The dollar was a note, like an IOU of gold that you had in the bank. That's what money is all based off gold. And right now there is no link. There's this whole thing around fiat money. It's like the gold kind of link was broken in 1970 or so by Nixon. Your dollar, you can't exchange that for gold anymore, but you used to. Now it's the dollar. It's just, this is what it's assigned. That's what the value is. Whereas the Bitcoin, you can see.
Yeah. I want to go back to an earlier thing you mentioned. You say that like Bitcoin is immutable and some of the other chains are not. Like, can someone just change the code for Ethereum, or like if Vitalik decides to change something, does he have the power to just change it?
Yeah, so they go through various upgrades and versions all the time. And even Bitcoin has improvements on the code base, which needs to be, if you like, agreed by all the miners and stuff to actually accept that code on. So like things like the Lightning Network, being able to work on Bitcoin as like a layer 2, that all required consensus from the network to be able to move to that next step. And a lot of cryptos even have like forks where there'll be some disagreement and they'll go, right, we'll go off on this way. Well, the version 2 of the network can go from that way, and we'll just see where the people go. Bitcoin itself had that fork. Roger Ver set up Bitcoin Cash around the early days as well. I was invested in that as well, 2017. And it was a faster, cheaper way to use Bitcoin effectively. So it was its own separate chain. But over time, people stopped using that chain, or less people. I think it's still around, but so the value of that chain became less. And this is where people always say, like, well, you can just do a better Bitcoin. Yeah, you can. But you get to a certain point where you can make a better Bitcoin easily. That's one of the other altcoins that are out there.
Yeah.
There's lots of other altcoins that which technically are better than Bitcoin.
Yeah.
Lots of them. But they are not decentralized, which is what gives its main value around the scarcity, and that no control and censorship kind of thing. But it's also now with Metcalfe's law, effectively like the value of the network. Not only has the Bitcoin network been around for so long and survived without any major hacks and still grown at greater hash rates, but the network has grown over time. You can make a better, like Facebook or Instagram or TikTok, technically. You guys have done something, right? You can make a better version of TikTok. You take the basis of TikTok and you say, all right, I'm going to do this, but I'm going to make it so the video stream faster, or whatever it is you do. Right. That's fine. You can do that, and you can launch, AdiTalk or whatever, but nobody's going to be on there. So it's not just a technical, superiority of an asset or platform. The network actually gives it a lot of value. Facebook is only valuable right now because of the network, because of how many users are on there, because of the base that they've grown.
Okay. Yeah, and I want to ask, like, how would you say cryptocurrency and investing in cryptocurrency is different from investing in the stock market? And what would you say are like the overall benefits as well as the negatives between the two?
Yeah, so I think the stock market, like I said, that it was interested in stocks as well. It's just a lot slower than crypto.
Mm-hmm.
It's not 24/7, as you mentioned. And fundamentals matter a lot more in stocks than they do in crypto. Because, look, you're at the time now, it's almost like the dot-com bubble.
Yeah.
It doesn't really matter. And this is why meme coins actually were doing so well this cycle. When you boil it down to, really, what people are looking to do now, apart from the hardcore devs and the users of certain platforms that are trying to grow, really everyone else is here for the speculation. We're here to make money. Like, I could love, like I mentioned, like Chainlink or other coins that are like maybe not as well known as like your normal Bitcoin, Ethereum, Solana, etc. And say, yeah, I love that. I always had that from the beginning, and I hope that one does well. But in the end, I can believe in what it's trying to do and head to that. But personally, I want to make the money on it, if you like. And so when you boil it down to that, shares, you do want to do that with shares, but you have to get a lot deeper into what that company does. You need to look at earnings reports, quarter reviews. You need to look at market sentiment. You need to look at what industry's doing. You need to look at what banks are doing and what the government's saying about this and that. You need to follow everything. So the fundamental side of it is a lot more important as information that you need to be on top of for stocks and shares. Whereas with crypto, like I said, you can have a better blockchain. Doesn't really matter if you've got a better blockchain. It's all about what's hot right now, what's moving right now. And a lot of that you can do through technical analysis, looking at charts, looking at patterns, looking at which ones have got momentum, which ones are breaking out of certain patterns. And you can simply trade on that in the short term, medium term, and long term. So it kind of takes away from the almost extra homework you need to do around the fundamental side of TradFi. Having said that, as you said, there's volatility, so a lot of it can go to zero. So there's much more risk with the swings in crypto. Despite the fact that even things like, so I own MicroStrategy, Tesla, as example, stocks. They're down 60% from their highs, 55 to 60% from their highs that they had in November, December, just 2-3 months ago, to the last month or so. So there's volatility in stocks too. It's just not as extreme in crypto. I follow a lot of people like Alessio Restani from Leading Trader. He has some guests on. They do a really good detailed analysis of traditional stocks, like how you value them, and what sort of chart patterns and things to look out for, which you can also learn up on online. The other negative I'd say with crypto is there are platforms that you can use to do the trading, and then you're like for like with stocks. You trade on this platform, I trade on that platform. It's the same thing pretty much. The same principles apply with leverage or stop loss and all that good stuff with trading. But if you're actually buying the crypto itself, like I mentioned, the simplest way is to just do your standard kind of Coinbase, Conjure type, Bybit, Binance, these kind of platforms as your on-ramps, just buy the coin, but then they're on that platform. And some of these platforms like Binance, Bybit, these are actual trading platforms. So they have all the leverage, the money markets behind them to get you invested. And some of these things can get hacked, right? There's old man Gox stuff that have been way, way back. And even more recently, I had money in FTX.
Yeah.
All these DeFi coins that were about. FTX at the time had a almost like a basket of stocks, like the S&P. You can buy the whole basket. They had this vehicle which was literally a basket of DeFi stocks.
Yeah.
And because I didn't know which one to pick, I thought, okay, I'll put some money in that one. And I lost it. Is it's on its FTN platform. I'm still getting some odd emails now and then saying when this next round of, process to see if you can get your money back or not. I've written it off long time ago.
Yeah.
But that's an example of you can lose your money through various things because these platforms are more new, they are less regulated, less insured, and you can lose your money easier than if you were in a traditional brokerage account or bank. If you were to do it in a more safe way, then you get into the really complicated thing of you actually should have hardware wallets. I should have actually got one before we started this this interview, but I use ledger devices, Trezor and others, literally hardware devices where you store your crypto, much more secure. You have your own seed trays, you've got your own device that only you can then connect that to actually make a transaction happen, rather than having it on an online platform which anyone can hack into, or even just know your username, password kind of thing. Hack into. But that's super complicated for a normal user.
Yeah.
And although I say it's far less risky than having it on a platform, where you've got the custodial risk of somebody else owning your coin, really, the converse is also painful, which is you now have that risk. So if you don't look after your private keys properly, or you lose them or forget them, then you're screwed. I'd say, learned a very hard lesson about that. So just this side of the New Year, actually, with Toshi. So Toshi, one of these meme coins that I really got into on the base network. And so I had a load of Toshi on a software wallet. This is one that's kind of like an attachment on your extension on your browser. So it's not like a platform per se, but it's not a hardware wallet in terms of security. And I'd set one up on my laptop and on like a MetaMask wallet, and I had one on my PC as well. And I realized the login wasn't working or something, so I was like, okay, I'll use the recovery phase that I had, which I had noted down. So I used that recovery phase to get to the Toshi that I had on that MetaMask account, wallet. But that seed phrase was for the software wallet on my PC, not the one on my laptop. And I didn't realize that it was a completely different wallet. I thought, no. At the same time, I thought it was the same thing, but it wasn't. And so I was like, oh shit. So then, and I didn't have Time Machine set up on my laptop to like look at the old files and things. And so I had to do a lot of digging, a lot of searching through various techniques to find the one file out of hundreds of these really weird log files that eventually I found the seed phrase or the wallet that was on.
Oh boy, what a relief!
Yeah. That was almost like 99% of the time you would never get that, and you'd done. So it's that level of risk that you take on, by not having it on a platform. And then if you want to buy certain things, you're going to have some that are in the hardware wallet, some that are on this platform, some that are on this software wallet, like the example I was getting. So, keeping on track of all that, you need then so I got a spreadsheet that here I'm looking at that keeps track of all this stuff. Where you wouldn't even know. You need all of that to know when you bought stuff and sold stuff or whatever, or your taxes as well. If the platforms that can just knock out a report for you, but it's only your taxes from that particular platform. What about the one that software wallet? It's like it is very complicated. It's not easy. But you do take ownership of it. And some people like that. A lot of people I know won't get it and won't want to do that, which is fair enough. We go for the easy way. Everything needs to be user friendly, even in your own bank apps and whatever else. So it's not for everyone. But the upside, like I said, there's huge upsides in crypto, and there's things in there that if you really believe it, it is like being in the start of a .com, like things like Solana, for example, Ethereum. These things could be massive over time, or other blue chip cryptos out there. You could be very early in those still, even now, and still make a lot of money from them. and believe in them and use them over time. So it's worth it if you like the value side.
Yeah. I definitely agree with that. You definitely need accountability. I just thought of like a random story of my friend as well. He bought crypto in 2012 actually, and he forgot his
wow.
seed phrase. Obviously,
Yikes.
it's been a while. And lost like, I think he told me it was like 16 or 20 Bitcoin, which would be quite a bit of money right now. So
And
for sure.
you're knocking on 2 million
Exactly.
USD.
Easily. Yeah.
There's a guy, right, who had the, I don't know,
Just
with the number loaded
can't
in,
remember. Yeah.
sold in a that's been thrown away, and he's actually
Exactly.
trying to buy the garbage dump
Yeah.
that he believes his hard drive is in somewhere, because it's worth like 600-700 million or something.
Exactly. I heard some people trying to hire hackers and stuff as well, just trying to crack this seed phrase just to get to their wallet as well, get millions, because it's well worth it if you can crack it, for sure. Another question I thought of was, are there any other good practices to follow if you were to invest in crypto that you can think of?
Yeah. So for practices, like I said, what I use a lot with crypto, because it kind of really boils down to you just want to make money. It's around speculation for a lot of it. You really need to get good at technical analysis, I think, or understanding where the narratives and the momentum is in a market, because that's really what you're there for.
Mm-hmm.
And so for that, yes, you need to look at fundamentals. You need to dig into a coin. You need to make sure that it looks legit. It's not like a scam. Or else you need to do some level of due diligence on a fundamentals point of view. But really, what's more important for me is on the technical side. So there's a lot of patterns that you can look at from a support when you're reviewing a coin. Key ones around the basic stuff like the volume, the volatility, how long it's been around for, etc. What its trading volume is on a day-to-day basis, and then looking at the charts. I mainly use chart patterns, looking at support and resistance levels. And really use basic indicators like moving averages, the BVR, a volume profile, so like how much volume is traded at a certain level, RSI, which is the relative strength index. That's more like a momentum kind of indicator, like similar to MACD. And then a lot of the tools, again, some basic tools, but really Fibonacci extensions, I think, are the most useful.
Right.
Where everything seems to just, it's almost like it's in nature in a way. Fibonacci is everywhere.
Yeah.
And you see that even in the stock markets. People, I think, although it's money in the stock market, it's all based off sentiment. It's based off human emotion. And it kind of follows a Fibonacci kind of sequence in the way the movements go up and down within the certain 618 and 318 kind of levels. They're very, 9 times out of 10, they hit these levels. So Fibonacci, I think, is a big one, as well as Elliott waves. So like how they go up in like 5 waves and come down in 3, and you can see how these waves look when you step back from charts. These are the things I think I find are the best ways to look at the coins and the charts when you're looking at it from a trading perspective. Obviously, if you're looking at it from a pure what you believe in, what you have conviction in, you have to do a little bit more work around fundamentals.
Right.
The other thing I'd say, if you're looking at it from a trading perspective, is the chart is one thing, but macro conditions, I think, are critical. And that's for stocks even. So the amount of liquidity that is in a system and the amount money printing that is going on from a government perspective, what's happening with interest rates, these things all really matter to how much risk people want to take on and how much certain coins or even stocks you own. So Raoul Powell is one of the real crucial sources that I use a lot. He does this Real Vision and Journeyman kind of podcasts. But his materials and just a number of charts and stuff that gets knocked out from what they do around global M2 and the ISM, like the survey of companies. These indicators are actually really, really crucial. And so from a macro perspective, yeah, Bitcoin can be doing something or crypto in general. But if money is being pumped into the system and you know that's going up, you're going to be in a good place. Whereas if you know that conditions are on a macro scale are against you, then it's probably going to be a bear market. You need to trade more on the short side, or adjust accordingly. So macro is the other one that I think you need to consider a lot when you're starting out.
Yeah, no, I think that's really important because especially when now so many things are changing, that the fundamentals or like the charts could be all pointing in one direction, but then Trump might decide to do something and then that would change the whole market. So yeah, that's just really important. And also I want to mention that I didn't know that the stock market also followed the Fibonacci sequence. So that's really cool to know.
This episode ran a little longer than usual, so we decided to split it into 2 parts. In part 2, we'll dive into the latest crypto trends and headlines, including the US crypto reserve, Trump coin, and a lot more. So if you're still curious about buying crypto or want to be better at understanding the whole ecosystem, you won't want to miss the next episode. Thanks for tuning in, and if you enjoy this kind of content, please do let us know in the comments below, and don't forget to follow us so you'll never miss an update.